Hey everyone, this is Finding Value. I want to go over understanding price movements in commodities. So we'll jump right in and see what we've got for us. So price movements in commodities when we think of them. So we've got prices move between demand and supply. When prices fall below the mining costs of higher producers, then production will fall. So we've got the high cost producers. Once the cost goes below them, they start to cut back the supply. And usually that's what brings supply and demand into balance in a falling price environment. Sometimes demand will vastly outstrip supply, and that's when prices really start moving to the upside. It says when prices move above higher cost producers, supply rises and new supply comes online. Technology can lower cost of production while being offset by inflating money supplies. The longer the price remains below a commodity's production cost, usually the higher the spike in price later on. So if the commodity is suppressed for a very long time, usually the price spikes larger in the future. Investors can cause major spikes and lows as they amplify the moves with retail investors chasing price movements. So what I've got here is a global primary silver mine production costs for 2019. And as you notice, if you look at the all-in sustaining top costs, it's this kind of greenish line here. And this is the silver price. It was $16.21 in 2019. You can see that cumulative silver production, the higher cost producers are going vertical. So when these supply over here starts to go into decline, it's going to be replaced with a bunch of higher cost miners, which means that the price of silver is going to go higher. The price of any commodity bounces between the mining costs of the higher cost producers and demand. So I see the mining costs of the higher cost producers shooting higher, or we're going after lower and lower ore grades, which means it's more expensive to produce the not as rich mineral land, not as fertile land, so to speak. So yeah, I think we're going to stay, this is going to be a long-term bull market, and it's going to stay elevated for a lot longer than previous bull markets, in my opinion. Here's the operating costs for silver. These are the different companies. These are obviously higher cost producers over here, and these are the lower cost producers. Now, when you look for investments, sometimes it's better to choose the higher cost producers, especially if they're earning hardly any money. These usually have the highest forms of leverage as prices increase, because their profits will increase that much greater as the price increases. So the higher cost producers are the ones that give you more leverage to the price of the commodity, and they obviously carry greater risk because you're going to be closer when the price falls to their operating costs. Here's global silver production estimated by global data. Obviously they've got it coming up, declining a little bit, and then going higher again. So they're forecasting that supply has not peaked and is dependent on price. So they have a silver obviously being produced at greater rates. So we're jumping from silver to platinum. This is platinum here. Here's the higher cost producers of Africa, which is 75% of the mine production worldwide. These are all in the 1200. This is about 1200 here, about the $1,200 per ounce cost. Down here is about 900, and we're at 800-900. So we're eating into the mid-tier producers. This isn't going to last very long, and we have obviously an anomaly, I think, in prices for platinum. Primary platinum supply here, they have it as a decline over time, so they're saying that we kind of hit peak platinum, and or prices are not high enough to increase production in the future. Once we hit a supply gap from electrical vehicle demand and increased platinum loadings in internal combustion and hybrid cars, we'll see if the supply can be increased, because I think prices are going to go a lot higher than where they are today. Here's for gold. This is the gold costs for South African gold mines. I use this just to see kind of what it looks like. It looks about $1,300 for the higher cost producers. So, you know, $1,300. We're at, you know, 1,900-ish. So we're obviously quite a bit above the cost to produce or supply. And they, at least this portion here, they think that gold has peaked, and it's going to peak in 2020, 2021, somewhere in here, and then head lower for global supply, gold supply. So if that's true, obviously I think gold's going to go up in price, and that's pretty obvious, especially if demand is increasing. Here's another chart just to see what they think. They're saying that the peak is probably, you know, 2022, somewhere in this range, and then a decline, and that kind of falls in line a little bit. So there's maybe a year off here. So they both think that peak gold production is coming up. So the main takeaway here is, to sum it up, is that prices fluctuate between the supply costs and the demand. However, wherever the demand kind of slows down is what slows down price to the upside. So perhaps we need to start thinking about what is the value of some of these commodities to society. If there were a shortage, what would the price shortage be at? You know, so how inelastic is that demand? And then on the other side, how long does it take to, you know, bring on new supply? Is it 5 years, 7 years, 8 years, 10 years? Because the greatest opportunities are going to be those where you have inelastic demand. You have a supply shortage that's been, you know, supply has been very low in terms of prices, has cut into the production. So no new supply has been growing for a very long time. And then eventually, when the prices do go up, it's very difficult to bring on new supply. Uranium comes to mind right off the top of my mind. So I just wanted to go through this, make sure everybody understands this. We want to be buying when the price is below the higher cost producers. That is the most profitable time, is right when it starts to move up and come out of a very long bear market. Uranium, platinum's in it right now, silver was in it. That's the time to pick it up. This is Finding Value. Hopefully you've got some enjoyment out of this clip. Subscribe, comment, and hope you have a nice day.